everyone. Welcome back to the MHP Show. I'm your host, Derek Vickers. Every week here on the MHP Show, we talk about anything and everything related to mobile home parks, mobile home park investing, crazy things that happen, all the other interesting things that go along with being in this business, because it does get interesting, and we always talk about that. But before we get started, I wanted to direct everybody to go check us out on iTunes. What else are we on? YouTube, Spotify. We're everywhere. We're everywhere. So drop a comment. Would really appreciate it. And one more quick note is that if you go to the website at go.parkinvestingpro.com, I have my free webinar up there where I talked about all the basics that are associated with getting into this business and talked about the reasons why it took me longer to get started investing in real estate. And this webinar will actually help you solve that problem. So go check that out at go.parkinvestingpro.com. So without further ado, I have another guest with us today. I have Mr. Chad Freeman with us. And if you're on LinkedIn, I know you know who this guy is. He posts on LinkedIn, fantastic content. Chad, welcome to the show, man.
Pleasure to be here. Thanks for having me.
For sure, for sure. So, so tell us a little bit about, kind of what I'll get into the background, but just give us a quick bio on what you're doing now and how you're even associated with mobile home parks.
All right. Well, I got into real estate back in about 2005. Had no clue what I was doing. I didn't even know what due diligence meant or how to invest, really. I was just speculating and kind of dodged a bullet and went from there and got into some good investments, made some money, and fast forward to it was 2017, I believe. And I had been looking at mobile home parks for a couple of years, and I found this killer deal in Michigan. So bought that and then bought another park a few years ago. And then last year we opened up a little syndication. We got a few investors and looking for more deals. So I do that. And I spend probably more time doing that than I do my job, which is considered full-time, but it's really kind of a part-time job with the airlines. So I fly airplanes around the world too, and gives me a lot of time off and downtime to look for real estate and build that on the side. And right now, in fact, I'm on a layover in Sao Paulo, Brazil, talking to you. So that's
oh, wow, dude, that is. I didn't know you were in Brazil. I feel like the last time we talked, you were in like Jerusalem or something, or Israel, I think. Is that right?
Yeah, I go there, and I go a lot of Tel Aviv and Brazil, mostly Brazil, and just because I like those two places.
Yeah, no, that's awesome being able to travel and things. And so how long have you been flying planes?
Geez, I first started when I was 18, I guess. So
okay.
I have to add it up every time if somebody asks. I'm 44. Was that 26 years?
Okay. Got it. And then have you always, did you have any prior entrepreneurial journeys before real estate? Like what was kind of the first one that either gave you the bug or what was that exactly?
That was it, man. So my parents were both in real estate, both realtors. My mom, that's what she did for a living too. And now she's one of the partners, but I just went hardcore after aviation, and I got in early. As soon as I graduated college, I was flight instructing through college, so I got right into the regional airlines. And once I got established in the airlines is when I started looking at real estate. I knew since college I wanted to invest on the side because airlines are very unstable typically or inherently. I knew that I needed a backup plan and something else to fall back on. So it started as wanted to be a passive deal, and then I found mobile home parks and realized I don't want this to be a passive deal anymore. These things are pretty awesome.
Yeah, right. How did you find out about this, this niche asset class that we have here?
So my buddy Kevin Kuzmanoff, one of my business partners, I don't know if you guys know that name at all, but first guy to ever hit a grand slam, his very first pitch in a Major League Baseball game. So,
wow,
dude. And I was over at his mother's house, and she also invests in real estate and sells real estate. And she had this mobile home park boot camp manual sitting on her table. And I said, "Hey, what's that?" And she told me about Frank Rolf's mobile home park boot camp. And I said, "Was it any good?" She's like, "Oh, it's really good. I took it twice." So I went and took that, and I've taken it 3 times now myself. Love that guy, and he taught me everything I needed to know to get going. Just, the book knowledge to where you're going to avoid the pitfalls and get into the industry. So I really appreciate Frank Rolfe and all the information that he's out giving everybody, including I've heard Brendan Turner even went to his boot camp now. So did you go to that?
Yeah, I did. I did it in 2020 when it was all virtual because they weren't doing anything in person anymore. So I did it virtually. Yeah, just a wealth of knowledge, especially a basis of it to kind of get you going in the right direction. But the interesting thing was the first park that we bought was actually, it had all the things that Frank tells you not to buy. It was that. Everything. Like there wasn't, like Frank gives you a list of things, don't buy this. Well, this was that. So,
okay.
Yeah, it was interesting when I got into it. I'm like, man, this is a rough deal, but we ended up making it work. So when did you buy your first park?
That was October 2017.
Okay.
We bought
and tell me a little bit about that deal.
Sure. So I was looking pretty much anywhere in the Midwest in decent metro areas, and I found this killer deal. This guy was going through a divorce, so he sold it for what he had in, and we got it at a 15 cap to start with. So that was really nice to enter with a 15 cap. A lot of wiggle room there to mess up with if you need to.
Yeah.
That was a 2-park package. It's up in Sturgis, Michigan. The one of them, it's a smaller park, a little 20 space park on city utilities, and it was I don't think there was any park-owned homes. But funny, on that park, on the books in that town, Sturgis, they have a law that states there must be at least one zoning for mobile home park, and we've got the only zoning in town for mobile home park. That's it. This little 20 space.
Wow.
And then you go down the road to the east, and it's a really pretty property. It's on, I think, 36 or 38 acres. There's 53 mobile home sites there up on a ridge. And then down off the ridge is a lake, and we got 47 RV spots on the lake.
Oh, wow. Wow. And that's a 100% RV park?
No, that's 50. It's licensed for 53 mobile homes. They're a little bit older, smaller lots, so we're going to get it to about 48 will be capacity. And then it has a seasonal 47 spot RV park on it. But that one we're going to actually try to grow. I know, you see a lot of properties where they say, oh, there's extra land and you can grow. And I never put any stock into that one. But I think we can actually grow this. The township says do it. We've talked to a couple of people that'll come help us plan the whole thing. And so we're going to do a little bit more infill once we hit all of our spots full. Then we're going to try to expand that thing because we have 30 acres.
Yeah. Wow. Yeah, I mean, look, if you can do it and the numbers work, I say do it. But, I don't think if you're looking at a deal and because there's potential expansion opportunity, like there's a lot more that goes into that. Yeah. And I'm like you, man, I don't put any stock into that when I'm looking for deals or things.
Yeah, we never did.
Yeah, I mean, I just think it's difficult. Like you got to go through the permitting. You got to, make sure all the lots are up. Like, it's not easy. Right. And so it can be an expensive endeavor, but I guess it could be profitable if you know how to do it correctly. It could probably be something good you could do.
I think so. And that's part of our personal portfolio too, before we opened a syndication. So I plan on keeping that property, and I think we can get that to over 100 spots pretty easily.
Yeah. Wow. Yeah. No, that's great. So so you're working like, I know I have a lot of listeners on here that are still working 9-to-5 jobs. They're still, maybe they're looking to get in the business or whatnot. So I'd love for you to share kind of because they hear it from me. Like they know I had a 9-to-5 and blah, 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 but I'd love to hear it from you, especially for people like, what would you tell someone that's like, man, I got a 9-to-5 and they're using that as an excuse to not get into this business?
I'd say go for passive investments and look at top syndicators and vet them, and then feel solid with what you're doing, but you have to be an accredited investor to do that as well. So if you're accredited, that's the way to do it, I think. If you're not, start playing the rich dad, poor dad cash flow game, right? That's where I learned, and it got me into the mindset of getting out of the rat race, right? So I started with a little condo and starts to cash flow, and then you can build quite a bit of wealth through small passive investments. I know other people that I work with too that have no dependence on their income from the airline, just through rental properties that they've built over the years. And it doesn't have to be a full-time job. You can have a management company take care of them too.
Yeah, for sure. And even like, so the first park I bought was a heavy turnaround, so I had to be there, but it was close, right? It was close enough that I could drive there every day. But if you buy, a relatively stable park, all tenant-owned homes, like there's not much value that you actually add by being there. And so it's for people that say that they they can't do it because they have a 9-to-5 job. In my opinion, that's just an excuse, because you can do it. Would you agree with that?
Yeah, and especially if you have a smaller park, you don't have to have millions of dollars to get into a smaller park. I'd say be careful with private utilities if you're looking at smaller parks, because they could end up sinking the deal if they go bad. Do really good diligence or try to get something with city utilities if you're looking at a 20, 30 space park. But if you've got something that's up and running, that's not a big turnaround, as you know, it's a boring deal, and now we're doing collections online. Most of our collections are online. So there's really not much going on there. And if you run it correctly, it's quiet and safe. And it's a boring operation that doesn't take that much time. Turning them around does take a lot of time.
Yeah. It's a different story. Turning them around. It's totally a different story. Yeah, and I think so. Your first park that you bought, you said that thing's fully stabilized now.
Yeah, they were nice when we bought them. They weren't that nice. They were nicer than you would expect, especially at a 15 cap. But it wasn't anything real crazy. It wasn't any big, heavy turnaround or anything like that. Just a few lots to fill here and there, raise the rents, submeter the water. So we actually had to go get the laws changed. We went to a city commission meeting and stated our case and had to, go tell them why. And so we got the laws in the little town of Sturgis changed so that everybody can submeter water now.
Wow. Have you found any 15 caps lately?
No. Nope. I sure would like to. And even our last park that we bought in 2019, I was seeing a lot more bigger spreads off the cap rate or the interest rate. And with interest rates coming up, it's tough. And even over the last couple of years, post-COVID, I found that there was just like this frenzy of buyers and all this free money out there and offering these crazy valuations. We had some offers on those two parks I mentioned. They offered us like a 5.2 cap, but we ended up turning it down just because of capital gains taxes, and it's not a complete product. We ended up making more money in the long run without that. We like them and want to keep them anyway. So, but I couldn't believe we got that offer on that place. I think a lot of it was spillover from apartments, syndicators coming in, and then that's kind of seems to have all dried up. Would you agree with that?
Yeah, I mean, absolutely. And I mean, I've seen, just in, my acquisitions team kind of poking around, and like there's people that want to sell. And when we go on the website and look at when it last traded and what it last traded for, your 2021, into 2020, 2022, where I think people got into these things and, they realize how much work it actually is. And now they're like, damn, I want to get out of this, but they're not going to sell it for what they paid for it unless they're in a dire situation. And so when I see that, I kind of like to figure out and feel out the situation, but most of the time I know they're going to want something stupid for it that you're just not even going to be able to come close to making work now. And so just a lot of interesting things going on in the market in general, I think.
Well, you also operate strictly in Florida, is that correct?
We have some stuff in the Carolinas as well, but it's predominantly in Florida. And Florida's a different beast.
Yeah. Yeah, it's definitely different.
So I haven't. Yeah, and I probably need to venture out with you, man, in the Midwest. I hear good things about the Midwest, and I don't know. I probably need to get out of the Florida bubble completely. It's just crazy down here, dude.
Yeah. Are there any issues with you getting insurance now? Because all I hear about is insurance problems in Florida.
Yeah, no, I was actually asked this question earlier too, and no, because we're just liability insurance. It's all tenant-owned homes, and so maybe we've gotten slight increases on the premiums, but it hasn't been, anything that we've like, oh my God, like this is crazy, because we're not insuring structures, and we have some structures on site, but we were somehow able to convince the bank that we don't care about these structures, because we don't. Like, if they get leveled by a hurricane, that's better. Like, then we don't have to spend 25 grand doing it, right? So no, we've got a couple, and again, so in a couple of the Tampa parks, like we have these efficiency units that they're 300 square feet. Like, there's tiny little 1-bedroom units, 400 square feet, whatever it is. I mean, they're small. And we insure those. And even then, we haven't seen anything crazy, probably because they're so small that it's not anything important to take note of. It's just a very small portion of what we do. So, but I know the multifamily guys are getting blown. I talked to a guy earlier. He was dealing with some multifamily guys, and they said the guy was expecting a 50% increase on his insurance, and they got a 200% increase.
Oh. Yeah, I'm hearing these horror stories like this, but I'm interested in. It's just because I live in Jacksonville, and there's a couple really great parks around me. But I'm just curious, and I've heard that it's very speculative, lots of redevelopment. But then I've been trying to shy away from it a little. But then a few years back, I hear Sam Zell was buying more stuff in Florida, so that made me more curious. But I'm definitely curious about Florida and a few places in Georgia too.
Yeah. I mean, Florida, I think is interesting because of the population growth. Rents are going to go up. We can't keep in any of the markets that we're in. If we get a vacancy for whatever reason, we've already got a list of people to buy it, and it's I just don't see the market down here slowing down anytime soon. I mean, maybe it'll slow down a little bit, but I don't see it. Yeah, I don't see it being drastic, because there's still a lot of migration to Florida, and mobile home parks are the cheapest place in town. You know that.
Oh yeah, we got the demand. Sure, as long as you got a decent economy, the demand is there.
Yeah, for sure. What do you see, I guess, in regards to kind of the future of the market, and with rates and everything the way that it is? What do you foresee happening? I'd love to get your opinion on that.
I see the entire U.S. possibly melting down. And, I think the winners at the end of the day will be mobile home parks and apartments too, because they're cheaper than single family homes. What is the average stick built homes out over 400,000 now still, I think, around the U.S. But it's as far
something like that.
Yeah, it's really high. And there's the feds pumped the brakes on the housing market, but then they also created a problem they didn't foresee, because everybody's locked in at the lower rates. So then inventory levels are coming down too. So it's not really working like they wanted there with the single family housing market. But as far as us with interest rates, we're just looking for a spread off the interest rate with our cap rates that we're offering. If we can enter with a 1-point spread, that gives you a 14% cash on cash return if you just run the numbers through what the mortgage looks like. So if we can do that, then it's not really a big concern. We try to get at least a 10-year term, or we have one bank we like does fully amortizing loans as well. But if you're financing now at a higher interest rate, it could be to our advantage if the economy tanks and the feds come in and decide to lower their interest rates. Now your property values go back up.
Yep.
If they don't, that's another thing with seller financing I'm careful of, because to answer the rest of your question, I don't know what tomorrow's going to hold. Nobody knows what's going to happen in the future. So if the interest rates go up too, I've been apprehensive with seller financing to do a short term. I think a 10-year term would be a minimum to be safe on them. So you're not trying to refinance and into an upside down environment there.
Yeah. No, I agree. And there's, definitely longer term seller financing with options. Like you have the option in 5 years if you can, if you're going to cash out of the thing, like you have the option to do it. I was negotiating a deal with a seller and they wanted to hold us in for 10 years, no prepayment, no nothing. And I didn't like that. I don't like not having the option. And maybe, you look back, we get 10 years down the road in hindsight and you're like, okay, that wouldn't have been a bad deal because, rates went up or whatever. But I like having the option and not being stuck because in reality, in 10 years, I'm not going to care about this little $2.5 million property. I mean, we're going to buy so much more than that. You know what I mean?
Yeah.
So it's like, to me, that was just a little too restrictive for my liking. But, if you've got a 10-year note, 15-year note, then there's like, you can refi out of it if you want. I like that.
Yep. I do too. Those, the fully amortizing loans we have too are quite comforting right now. And they were put in at I think we're at 5.25 or something like that. They're fixed.
Yeah.
So
yeah.
Those are pretty hard to find out here commercially. I've only found them in one place.
Yeah. I've never seen those personally. We've got a couple of banks that we've worked with, but I haven't seen those exactly. Are you seeing a lot of opportunities for seller financing out there?
I mean, just the mobile home park space in general has it because everything I'm targeting or most of the stuff we're looking at buying is from mom and pop, and they've owned it back since the 50s and 60s when they built them, or the 70s. So most of them are paid off.
Right.
So
right.
Just trying to show them the advantages of seller financing.
Yeah. But even I found, Chad, like sometimes, like if you want to do seller financing, great. I can pay you a higher number, but that means the interest rate has to come down. And some of the sellers don't want to bring the interest rate down because they put it through their mind and they're like, oh my God, I can make 8% on $3 million. Holy shit. Like, this is great. And then I'm like, no, that's not how it works because
why wouldn't I just go to the bank?
Why don't I just go to the bank, right? Like we had a guy that we're talking with, and he's like, "Oh, well, we sent him an offer." He's like, "Oh, well, I thought seller financing was, the rate was more than, like prime." And I'm like, "No, it doesn't work like that. Like, otherwise, why wouldn't we just go to the bank? Like it's not like." Yeah, so definitely you're right on the educational piece, and there's opportunities out there for seller financing, but I would just like it's not as when people talk about it on podcasts and things like, oh yeah, seller financing is the best thing in the world. Look, there's a lot more variables that you have to negotiate, and sellers a lot of times will want some crazy stuff, like and some of the stuff. So I had a guy, he wanted to basically vary the principal of the note according to CPI. So let's say it was $1 million note. And if CPI was 8% next year, that note would be $1,080,000, right? And so now he's getting paid on $1,080,000. And then the next year, if it went up another 8%, and it's $1,007,000, $1,177,000. So it's floating rate debt essentially. And I'm like, dude, this is no.
I'm sure you jumped
doing
that.
Yeah. And so like my point is, so we had a deal. We had agreed on terms with this guy, and then he throws this freaking curveball at us when I'm meeting with him on site, and I'm like you just shot the deal. Like it's just not going to work. So, what's the future for you? Like, what are you aiming for? Are you buying? I know you're looking to buy more deals right now, but are you looking, how big are you looking to grow, and what's kind of the future for you?
My target ideally is I'd like to be next milestone's in the top 100 owners, which I think you are.
Yeah.
And I'm targeting at least 2,000 lots. Once I get there, I'll reevaluate. But I don't imagine if I get to 2,000 lots that I'd want to stop anytime soon. So I just see more mobile home parks in my future. And I think now's the time to buy them. I think in the next 5 or 10 years, it's going to be a totally different environment with this opportunity that we're having today. And it's also nice seeing new blood come in and, bringing money in and turning the old parks around and making them nice. I've noticed that up in Michigan, driving other parks around me. A lot of them are getting nicer now. And there's a lot of money coming into this space. And I think we have a better product too than apartments because, as you know, or anybody who likes mobile home parks, you get to own your own dwelling and you're not sharing any walls or, floors and ceilings with your neighbors. You get to own your own place and park at your own front door. So it's a better product as long as you have a nice property and it's managed well.
Yeah, totally. And I mean, even the parks that I see around the markets that we're in that are just still in utter disrepair because of mom and pop and whatever, they just, they don't care. They're still full. And I guarantee you, if someone moved out, they could bring someone else in because if you're in, let's say in Orlando or Tampa, Florida, I mean, apartment rents are, it's $1,500 and you're not even in that great of an area. It's not that, you're probably in a class, a B class asset, maybe a little lower than that. And, if your lot rent, like, I don't even know where you could rent an apartment for $600 or $700 or even $800. You'd have to carry your Glock with you.
Yeah.
Every night. You're not going to like it.
Uh-huh.
So that's where I think that we win in this asset class is that because we can still, make these properties nice, bring them up, but we're always going to be the most affordable place in town. And the fundamentals, I don't care what the economy is, like the fundamentals of this business are so sound that, I will definitely say that these things are recession proof. Now, if you bought it, if you timed your buying terribly and you got floating rate debt, you could do everything right. Your business plan could be ahead of where it is. It could be, you exceeded all your expectations, but because your debt payment went from, $25,000 a month to $60,000 a month, you might be in trouble.
Yep. And that's the other thing I like with mobile home parks is they're not very complicated, and I hear some of the apartment syndicators and how tight their numbers are. And you really got to be on your game. Otherwise, you're going to start losing money really quickly. And I think there's a lot of leeway with mobile home parks. And you're just renting lots and providing utilities to homeowners. If we don't do any park owned homes or no rentals, but if we buy anything with park owned homes, we get rid of them.
Yeah.
So I really like that model, especially through COVID, and that was a huge stress test for us to build my confidence in the whole sector too, to see what happens when the economy or everything shuts down. And we're also considered essential. So we didn't miss a beat. We even did a rent raise in April of 20. April, we do a rent raise every April. So all through COVID, we did rent raises. Didn't have anybody miss payments. And it's incredibly cheap. It's stupidly cheap. I mean, where else can you go once you buy a $30,000 home and you pay it off? Now the average lot rent in the U.S. is $300 a month. Where can you live for $300 a month?
I don't know. I can't imagine paying $300 a month to live. You're right.
Low, but even at a fair market value, $500, $600, $700, and you own your own place. That you can't do that.
Yeah. Right. And look, I think that goes to show like even the strength of the asset class. And, I think, unfortunately, I don't foresee cap rates, even if the world blows up, it's already blown up in office and maybe there's more blow ups in multifamily for sure. Cause these guys were buying at 3 caps. I just don't see I hear people waiting. Okay, I'm waiting for the blow up in mobile home parks. But if you're looking at cap rates from a cash flow stability perspective, because of what you just said about multifamily, when we get 50 tenants in our 50 lot park, if we've done a good job on the background checks, what are we going to, like, we don't have, our operations don't have to be that great while we're doing, because we don't have any lease up. We just got to make sure we're collecting the money.
Yep.
And those kind of assets will yield a lower cap rate, I think, regardless. Because, you know, you got a big institution or somebody, they're like, damn, you know, I can buy a mobile home park. Yeah, the cap rate, I'll pay more for it because I know the money's going to be there every month. In apartments, you know, you could have, you know, an exodus of some sort, but you're just not going to have that mobile home park.
Yeah. And along the lines of that, I've been told that the average tenant lasts about 14 years in a mobile home park. What's the average tenant in an apartment complex? Or longevity?
I don't know.
It's not 14 years.
No. No way. And that's why, you know, I think too, like, if, you know, I don't think you can wait in this asset class for things to blow up. Yes, as I just mentioned before, there may be some people that got into trouble, but think about this too, Chad. Like, if you, let's say a guy gets in trouble and it goes back to the bank, and the bank's like, hey, Chad and Derek, you know, you can buy this asset for 75 cents on the dollar. Chad, you're like, yeah, I'll do it. I'm in. Then they send it to me and I'm like, I'm in for 80 cents on the dollar. And then they send it to my buddy over here and he's like, I know, I'll do 85 cents on the dollar. So yep. I think it would end up being to where, you know, you may be able to buy something for 90 or 92 cents on the dollar. Like, we may have some movement, but like, unless something drastically crazy changes, like, I just don't see much movement in cap rates. I mean, maybe there's going to be some, and maybe there'll have to be if the Fed just keeps going. But like, in Florida, people are still holding strong. They're like, yeah, this is the number I want, and that's it. So
I found that I don't know, the seller expectations they were stickier than I thought with the interest rates coming up. So maybe people are thinking that interest rates are going to go back down, or maybe they just want more money than they should get. I don't know, but they didn't move as I thought, and I'm finding that it's tighter now than it was when I first started buying mobile home parks. I have to, you know, I was trying to get a 2-3 point spread with everything, and now it's like I'm doing offers at 1 point spreads. I'm happy there, but it's definitely an environment than it was a few years ago, and I don't know. I don't know what tomorrow holds, but as long as you avoid the pitfalls, do good due diligence, and don't do anything dumb with the financing or overpay for something, then mobile home parks are a solid investment.
Yeah, for sure. So what's your investment criteria? Like, I get the question all the time, Derek, how do you tell if a good deal is a good deal? And I'm like, well, that depends on what your buying strategy is, what your criteria is. And you got to figure that out, whether you want cash flow, appreciate, like, what do you want? So what do you look for if you're looking at a deal?
I'm just looking at each individual deal. You know, to start with, I'm looking at the economy, because you can't fix the economy. So you got to have a good economy. And then, of course, we want public utilities. We'll look at private utilities if it's a really good deal, but we're looking for value add. Our biggest criteria is value add. Even if it's a nice park, let's say it's, you know, a nice park that's mismanaged or because their rents aren't high enough, that's a great deal right there. That's the home run where all you got to do is go raise rents. Mm-hmm. Nice, right? But everything we're looking at is for value add, because we like to go in and drive NOI and fix the place and turn it around, make it nice, and then look for more.
Yeah. Is there any type of in-place cap rate that you look to, or is there, you know, a cap rate or a cash on cash you like to hit in year 1 or year 2?
Well, I'm looking for that 1 point spread, like I said. So, you know, interest rates right now, 7.25 on commercial loans from what the bankers are telling me. So when I'm making offers, I'm looking at 8.25 cap rates. And that's about my top dollar, unless there's some compelling reason to go lower. You know, I found a park and we were trying to do a seller financing deal on it, but we were willing to do like a 5 cap because the lot rents are $215 at this place, and it's a good location. It's a nice park. They should be 500 plus. So if it's that low and there's some compelling reason, then we can go below that spread. But normally that's about my limit on what I'm willing to offer is the 1 point spread, because that'll give you like I said earlier, the 14% cash on cash return.
Right.
So, and then we don't buy by NOI and add value.
Yeah. And I think, because we were buying such heavy value add stuff, I've had to sort of work on switching my outlook here, because we did some heroic deals that were a lot of work, but we created a lot of value fast. And now I've been looking for some more plays like, you're talking about here, and like, hey, if it's an 8 cap in year 1, we can get it to a 10 relatively fast. That's nice. Or even getting to an 8 cap relatively fast can be good, depending on the debt that you're getting at this point. And also, like, I think as an experienced investor, so I bought a ton of value add stuff. And so now if I have to pay, for example, like we bought parks at 40 a pad, heavy value add, but we made them worth 100. Now this is in Tampa, so don't, get correct. Like, Derek, no way. Yes, it's in the middle of Tampa. You can't.
Tampa's pretty awesome.
Yeah. And so would I buy that park today if I had to pay 70 a pad for it? Absolutely not, because the juice is not worth the squeeze. I mean, I can't, because it's a pain in the ass. There's a lot of problems. There's still stuff that we deal with daily because we bought these heavy value add stuff, and I wouldn't do it. Like, I want to buy more stuff like your first park, where you go in and you may not make as much money in year 1, but it's just going to sit there. Like, it's just going to sit there. And I like the idea of that, because if you're buying, and look, in the beginning, you have to buy a heavy value add, I think, really heavy value, depending on what kind of, if you want to multiply capital or whatever. But as an experienced real estate investor, you start to look at the headache value starts to play a part in your investment thesis. I don't know if you agree with that or not, but it sounds like you may have had that from the beginning. But in the beginning, I was like, let's just go buy everything and we'll figure it out.
Yeah, we try not to be afraid of work, but it's got to make sense to do it too. So it is a lot of work when you get a big turnaround like that. But I was thinking too, when I was telling you about the 1 point spread we're looking at, there has been a few lately that weren't as much value add that I ran across. I made offers on, but I just put a higher cap spread off the cap rates where it made sense, and then go off of that price too. So there was still a value element like that, but it's just not the big turnaround. So, I mean, ideally, you just get the nice park that mom and pop manage, that's undervalued because of the lot rent, and everything else is perfect. And they exist. I missed out on one in Houston. I moved out of Houston, and I was bugging this guy for years. And I just quit following up with the guy, and then he sold it. And I still regret that. It's a nice 130 space park in a powerhouse metro area with the lot rents at like 300. And it was perfect. Everything about it was great.
Yeah, those, man, I couldn't tell you, like, some of those hurt. Like, there was a park in Tampa down the street for us, 270 lots. It wasn't like just the size of it. And I didn't follow up with this guy for whatever reason. He was kind of nasty when I talked to him, and he's like, we're not selling, blah, blah, blah. I went in person and talked to this guy. And, when I finally grew up the gall to call him back, he's like, oh yeah, we sold. And he told me, he was adamant and told me he wasn't selling. And I'm like, so it's the same thing when I was in insurance sales. If they tell you that, like, they're absolutely not going to sell, they're probably more likely to sell. So follow up with them. If they tell you not to follow up, and, definitely follow up. Like,
okay.
Otherwise you're going to call back because Chad called and closed the deal. So follow up. It hurts, doesn't it?
Yeah. Makes me think of this old guy in Houston, another one I kept every 6 months. I'd call this guy every 6 months. And it wasn't that big of a park. I gave up on it when I moved. But I asked him something about when he'd be willing to sell or something like that. And he said, you can watch for my name in the obituaries. That's when I'll be willing to sell it.
Oh my gosh, that's pretty funny. What's the craziest? So you've got a few parks now, so you've seen some of the madness I'm sure that can happen. You got any crazy stories or any crazy seller stories that you could share? I want to know like the best one or two that you got.
Well, we had something
If
real
you
crazy lately, but the most outrageous story, I think, is the last park we bought. Our manager went to this guy, and he was the resident drug dealer who no longer lives there, obviously. But she told him that the mom and pop who owned it, they just let everybody live there. They let like 15 people live there for free. So
Yeah.
all this outstanding balances. And the manager went and said, if you're going to live here now, you're going to have to pay your rent. And it pissed him off so much that he swung a hammer at her. And she took off running. She's like, I was afraid he was going to throw it at me. But she jumped in her car and called the cops. And the cops show up. And then he got I think, double felony for the assault with the hammer and then resisting arrest. And so he spent months in jail, I think, or at least a month. And his buddies came over and totally ransacked the trailer. Like they tore the siding off. They ripped all the furniture out. They threw it all over the yard. So that's some of the stuff we've had to deal with when we go buy and turn around. That's one of the first things we do is get rid of the bad apples like that. So
yeah,
it's nice too, because the other two properties I mentioned earlier, it was nice when we bought them right at the entrance. The entrance, thing that everybody sees when they drive in, their first impression was this old rundown piece of crap that another drug dealer lived in. And the lady next to him was scared to go outside because of this jerk. And so he's gone. The house looks great now. And so it's kind of rewarding with that stuff too.
Yeah, it is. And we've had a lot of that in our parks that we bought because we were buying this heavy value add stuff, and that's just what you get. And unfortunately, one bad apple can actually ruin the entire park. Like, it's so true. Like, you can have a great park and then screw up on your background checks, and now you've got an idiot in there doing whatever, dealing drugs or who knows what. And it just screws up the entire park. And like, after you get these people out, the whole like energy around the park changes. I don't know if you've seen that or not, but I've witnessed that to where even the park still looks junky because we haven't done anything to it yet. But since we got the people out that were dealing drugs, prostitution, like all kinds of stuff, like it's better.
Yeah, it definitely. I got another funny story for you too. So
let's hear it.
It was back to the first property we bought, and we go, it's like just one road in. It's been called a shotgun park, where it's just one road in and out. That's it. And so we get to the end of this road, this 20 space park. And I noticed back in the woods on the neighbor's property that is listed for sale there, it's just a big vacant lot. There's all this stuff from these tenants, and it's a mixture of like a bum encampment / fire pit barbecue area, drug emporium, whatever you got. And we say, hey, you guys got to clean this up. This has got to go. And it's on the neighbor's property. So this lady says, oh, well, I know the neighbor. And they said, as long as we're doing improvements to their property, that we can use their property. So these are our improvements. And I'm like, yeah, no way. So I go find the property owner, and we show up with the cops and the property owner. And they don't know this is the property owner. And so the cops are like, hey, you got to clean all this shit up. And she goes, well, same thing. And the cop like, well, there's the property owner right there. Do you know him? Do you know these people? And he's like, no. She goes, oh, I know your mother. And I think his mother has probably passed away. He goes, my mother? No, you don't. And so that was our easy resolve. They ended up, the cops were like, either clean this up or we're going to have it all hauled off in a dumpster and charge you guys for it. So they cleaned it up, actually. But it felt really satisfying to go show up with that owner.
Yeah, I know. Like some of the stuff, I don't know if you listened to Jimmy Johnson's podcast I had a few weeks ago, but this guy has the craziest stories for days. Like he even told me some after, like, it's a crazy little business, but it's fun at the same time. So do you guys have anything under contract now?
Not right now. I've backed out of a few lately, but should soon. I mean, we're making offers on anything that makes sense.
Yeah. Yeah. Same. It's just, it seems like it doesn't seem like it is. You got to make 20 offers now to get a deal versus in 2021, it was just, come in at asking price and it's yours.
Yeah.
Kind of thing.
And it seems like it was easy. It started in 2017. Like there's just deals everywhere. And I didn't realize it as much or how to go get them as quickly either.
Yeah. Yeah. So I guess, before we end off here, so what advice would you give yourself knowing what you know now about this business or entrepreneurship? Like what would you, looking in hindsight, what advice would you give yourself before you started, or maybe even your 18-year-old self? I don't know. However you want to see that question.
It's funny because I've been starting to mess with putting a book together on that, on thoughts about things I wish I would have known when I graduated college. The biggest thing I had to figure out for myself is to quit losing money and start making money is the difference between investing and speculating. So, I mean, and you got advanced speculating like Wall Street. I think that's like going to Vegas, basically. If you listen to guys like Warren Buffett, or Ben Graham, who taught Warren Buffett, they teach you how to actually invest. And that's what I've learned how to do with real estate, to where I didn't know that at first. And I wish I would have known the difference, but it was a good education when I first bought my first real piece of real estate, and I was only speculating. It ended up costing me, I don't know, like $20,000, which was a ton of money at the time, but it's totally worth the education to cut your teeth on something smaller. So my best advice would be, instead of just jumping into it, get a little bit more education on it. Cause I thought, everybody gets rich on real estate. You just go buy real estate and price goes up and then you get rich. It doesn't work like that. You got to buy the right piece of real estate at the right price.
Yeah. Yeah. No, that's great advice. And I'm with you on the Wall Street thing. And, I think people get it. I tell people, I guess if you understand stocks and you understand the legal casino there and on Wall Street, more power to you. But Warren Buffett, they're like, oh, Warren Buffett buys stocks. I'm like, dude, Warren Buffett takes a massive position in a good company. Like, he doesn't just buy stock. Like, it drives me nuts when people say, oh, I'm going to invest in stocks because Warren Buffett does that. Warren Buffett buys, 50% of the company. Like,
yeah, for the whole thing, if you can.
Yeah, exactly. So that's a lot different than, going and buying 20 different stocks and, hoping and praying that, the hedge funds shorted this one at the same time and they were pumping this one up. And so you're in the middle of that and you get it. Like, it's just it's a casino for sure.
It goes back with the same thing as doing really good due diligence with mobile home parks. Because if you figure out what Warren Buffett does, he's pouring through annual statements and he's doing a lot of due diligence. He's not just going off the next, hot stock tip that his buddy told him about that everybody's jumping into. That guy knows what he's doing, and it's all about diligence and figuring out buying a good company at a fair price. Same thing with the property. You buy a good property with solid bones, even if it's a big, heavy turnaround. At the end of the day, you're going to have a really nice asset there.
Yeah. I think that's great. I was actually just reading the Tao of Charlie Munger. It's just a fantastic book. Like, I'm sure you've read that, but just a lot of wisdom in that book, and just about what you just said about buying, good companies at fair prices. I think that's I think that's just an interesting model that doesn't ever, you can't go wrong with that.
Yeah. And now, actually, I have not read that book, but I got a new book to read now. So thanks.
Oh yeah. It's a great book, dude. It's a great book. And it's a pretty short read too. It's not too long. So, but anyway, dude, Chad, I appreciate you coming on, man. I appreciate it. It's been a pleasure. Anything you want to leave anybody with, or?
You can find us on the web, if you don't mind us say that we're MHP.
Absolutely. Where?
MHPinvestors.com, like mobile home park investors.com, or anybody wants my phone number, it's 303-590-5590. And we're on LinkedIn. I always love to talk about mobile home parks. That's how you and I found each other, is on LinkedIn and talking about mobile home parks.
Yep.
But
Yeah.
Thanks for having me, man. It's a pleasure to be on the show.
Yeah, cool. Well, thanks, Chad. And so, hey, everyone, thank you for listening. Please leave a comment, like us, don't like us, whatever. Just say something, man. Give me a review. I want to know if I'm doing good or not, because I'd love to, if there's any criticisms or anything, I'd love to know. So then maybe we can change it. So anyways, and also check out the go.parkinvestingpro.com, and we will see you all next week. Peace.